Well, when you look at a chart of the major market indexes, like this one, it's no doubt that you start to think we're on the edge of a big crash. The market has gone from, on the NASDAQ 100, 260 just a year ago to almost 450. So the question is, are we on the edge of a major market crash? Well, I'll answer that this week. Plus, I'll do my normal market analysis. We'll figure out where stocks, commodities, currencies, Bitcoin are likely to go. And then finally, I'll show you the trade of the week. That's all coming up in this week's Stockscores Market Minutes. So the indexes, like the NASDAQ 100, the S&P 500, they've made some really massive gains. And that has many thinking the markets are way overvalued, they can't keep going up this much. But you have to understand that it's really a tale of two markets. There's the market that's represented by the S&P 500, the NASDAQ 100. And remember, those are market-weighted indexes, which means they're heavily dominated by the largest companies. While the largest companies in these indexes, companies like NVIDIA, Microsoft, Google, Apple, Amazon, a lot of that strength has been fueled by artificial intelligence and the boom in that area. And that has driven these stocks dramatically higher. The reality is most of the market hasn't participated in that strong upward trend. And so, while you may argue that some of these high-flying large cap tech stocks are very overbought, when you look at most stocks, they really haven't enjoyed those sort of gains. And in fact, they're just starting to move up. I'm going to show you some charts in a moment to demonstrate this, but don't be persuaded that there's going to be a crash because the market indexes are up so much. Because if you really look at most stocks, they haven't enjoyed those kind of gains and therefore aren't subject to those same overvaluation concerns. Now let's look at some charts to emphasize this. So this is a chart of the S&P 500, and there you can see really strong gains. Back in late 2022, it was around 350, now it's over 510, and it's starting to go quite steep, which tells us that there is emotion. Anytime the trend runs away like this, there's some emotion in the market. Okay, but what if we look at the unweighted version of the S&P 500? So this is where every stock has the same weight, the same 500 stocks, but now you see that, yeah, it's made some gains since the fall of last year, but it really hasn't been as significant as what we see in the S&P 500. Remember, same 500 companies in these indexes, just one is a market-weighted index where the largest companies have a heavier weight, and one is an equal weighted index where each company has the same weight. And if we drill down even further to the Russell 2000, which is an index of 2,000 small cap stocks, well, in that group, you really don't see much strength. We had a little rally going into Christmas, the Santa Claus rally. It's been building a base over the last 6 or 8 weeks, and it's only now that it's starting to break out through resistance, indicating that the small caps are likely to move higher. We'll talk about more about that in a moment. So the basic gist then is, while it seems like stocks may be overvaluated, because if you read the headlines, you keep hearing about markets up, 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 but that's not most stocks. Most stocks are just getting started. Most stocks are playing catch up to those large cap tech stocks. And so I actually think that this is a great time to be in the market if you look beyond that group that has pulled the indexes higher. All right, let's get into this week's market analysis. We're going to jump into some charts here. We'll start with the S&P 500, which we already talked about a little bit. And here is the daily trend on the S&P 500. Here's the 1 month trend on the S&P 500. And here's the 3-year trend. It's all bullish. You could argue it's a little overextended, but when we look at the 6 month, let's say, and go to a daily time frame, you can see that it's a very linear trend. It's just been edging its way higher, not in a parabolic fashion. And so it's actually pretty steady. I'm not concerned about even the S&P 500 until that upward trend is broken. So bullish there. NASDAQ, very similar, QQQ. And there you can see, again, a very linear trend. Looking at the 3-year, it's linear, although in the very long term, it is getting a little bit extended away from the long-term trend line. And so if we were to break this, we may see it pull back to that trend line. There's no sign of weakness yet, and so we shouldn't be too concerned. Now back to that IWM chart, because this is where I think some of the best opportunity lies, because this market is finally breaking through resistance from a rising bottom, and that indicates that we're likely to see moves upward in the weeks and months ahead. And it's perfect timing, because normally at this time of year, you get strength in stocks. It's the spring rally, March, April, May, sometimes even into June, and it's starting now. So if you've been sitting on the sidelines, or if you've been heavily invested in those large cap tech stocks, it may be time to rotate into some of those overlooked small cap stocks. And we'll talk about another catalyst for that in just a moment. All right, let's continue along. Look at the Canadian market. T.XIU is the symbol there. And again, you can see an upward trend, maybe not quite so enthusiastic on the Canadian market. And when you look at the 3-year, you can see it made its breakout, much like the IWM is making now. The Canadian market made that a couple of months ago, and it's moving up towards where it will find resistance up in here, so it still has some upside. Commodities, gold had a good day on Friday. You can see the rally there. Now if we look at the 3-year, what we see is it's in an upward trend. It had a little pullback for a couple of months, and now breaking that pullback, which means likely to move higher. It is, however, quite volatile. You can see there's lots of volatility there. Wouldn't surprise me at all if we get a little pullback early next week, but you may be able to buy some of these gold miners on weakness and sell them on strength. Moving along to the oil market, USO has just broken out this week from this ascending triangle pattern. It's not a really strong breakout. You can see volume isn't that strong, and it had a little difficulty holding the gains on Friday. But it is generally an optimistic chart, and I do think that oil is starting to move up again. Will likely get stalled up there. But I've been noticing some energy stocks, some oil and gas stocks, starting to look better. There's been some action in them. I think it's a little slow to start, but if you're looking for a place to buy something that hasn't gone up a lot, that hasn't gone up like the tech stocks, then this is a place to look. Take a look in the energy market. Moving along, let's take a look at currencies. UUP is the US dollar, and you can see it's generally grinding its way higher. If we go to the 1-month time frame, over the last couple of weeks, it's been going sideways. If we go to the 1-year time frame, it's generally moving up from right to left, but with that little lull over the last little while. So it's sort of neutral to bullish in the medium and short term. Bitcoin has been the hot area of the market. And of course, we've been bullish on Bitcoin since way back here when it first broke up from a rising bottom. It's now getting quite extended. You can see price is far above the trend line, but there's still no sign of a breakdown. If you're in Bitcoin or cryptocurrencies in general, what you want to watch is whether this trend starts to break down. If we start to build falling tops, and I would watch something like this, a shorter term chart, the 60-minute chart is what I show here. If you start to build some falling tops and break some upward trend lines, then maybe time to take some profits. But for now, the buyers are in control, so stick with it. So what's the catalyst for those small cap stocks to play catch up? Well, it could be this chart. This is the Treasury bond market, which really is driven by expectations for what the US Federal Reserve is going to do. And you can see it started to move up a little bit. It did that here as well. And so we still need to break this downward trend line. But in the longer term, we built a bottom here. We've now got the potential for a rising bottom, which could resolve with a break of this pullback and lead to a rise in the bond market, which would mean interest rates move down. And that would be that catalyst for the stock market to for the small cap market to start to improve. So here's my ratings. See a lot of green on the screen. If you looked at this video 1 year ago, you'd see a very different picture. So we've had a nice bull market in those large caps tech stocks, and now the small cap stocks starting to catch up. Bullish on all time frames for those. Gold also bullish on both time frames. Oil still long-term neutral, but it is improving. So I've got a bullish short-term rating. US dollar neutral on both time frames. Long-term starting to get better. Bitcoin remains bullish, but I think risky. And then bonds, I've upgraded it from bearish in the short term to neutral in the short term, but still long-term bearish. It still needs to break that downward trend line. All right, well now let's take a look at a trade of the week, and this one is a swing trade. What is a swing trade? Well, swing trades are where you hold stocks for anywhere from 2 days to perhaps 2 weeks. And most swing trades that I trade or that I find are found in the opening hour, which is nice for those who maybe have to go to work during the day. They can't watch the market during the day the way a day trader would. And so with swing trades, you can usually find most of them early in the day. This is one I'm going to show in a moment that was found in the opening hour. And it really drives home how my principles work. I look for stocks that nobody really cared about, that kind of fall asleep, get quiet, and then they come alive with abnormal price action, with abnormal volume. I've created algorithms to look for that. I've got computers, the ones you see behind me, that are monitoring all stocks looking for this abnormal activity. And when we find it, we take an inspection of the chart pattern. And here was one that looked really good on Monday of this past week at 9:56. This is a 13-minute chart, so each one of these bars is 13 minutes. And on that particular 13-minute interval, it made an abnormal price gain with abnormal volume, breaking a downward trend line from a rising bottom. And so that is one of the things that I love to look at, whether I'm day trading, swing trading, position trading. This is a great pattern setup. In this case, the stock went from 9.23 to 12.5 almost in the next 3 days. From a selling standpoint, it broke its upward trend line right in here. And so to me, that was the time to sell it. Now later in the day, it went a little higher, but it's since rolled over. And so we like to buy it when it starts to move and then like to sell it when the upward trend line is broken. And that was worth about 5 times risk. So for every $1,000 of risk, there was a $5,000 profit there on a trade that lasted just a few days. Well, hope you've enjoyed this week's Market Minutes. Do you think we're on the edge of a crash, or is the strength just beginning? Are we going to see a rotation of strength out of those large cap stocks and into the broader market? Love to hear your thoughts on that. Leave a comment, like the video if you enjoyed it, and most importantly, trade well.